So we want to take a look at what business will be doing from here on out. Are they going to put money to work? That Trump bump on the market is credited with helping the Dow reach a new high. Take a look back. Here's what I said was a winner declared on election night when we knew Donald Trump was about to take it. I would predict to you, Brett, that this ultimately will be a huge buying opportunity, because when you look at both candidates' economic plans, on the Trump side, he wants to lower taxes and roll back regulations. Regulation has been the one barrier for small business and large business, by the way, in terms of growth. Economic growth is the priority. That's what this country needs right now. That's what will be positive for the markets. And I think ultimately people will view this major sell-off tomorrow as a huge buying opportunity because of his policies. Okay, so, you know, I've got myself on the back.
Yeah. I mean, you're very modest, but that was
for years, actually.
That was a phenomenal call because, you know, a lot of professionals, a lot of quote-unquote brilliant investors were saying this is going to get really bad, really ugly. You stepped up in front of that. You should definitely pat yourself on the back.
Somebody said to me the next day, what were you thinking to stick your neck out like that? And I thought, well, I had to because I feel like it's a growth plan. And the shackles are coming off business.
Sure.
And that's the thing. So the question now, of course, Dagan, is how much farther does it go, or does it just hang out here a bit? I mean, as a trader, Mike Murphy.
Right. I think what you have is you hit the nail on the head on election night, less regulation and lower taxes. So now it becomes a show me story. If the earnings can't keep up with the market at 20,000, we're going to pull back and settle back in lower. But if they can keep up and continue to grow like we're starting to see, we can go a lot higher.
Yeah.
Well, I think what investors are saying, I mean, they've agreed with your call from election night, but they did not believe the pundits who for years have told us we're into secular stagnation, that we just can't grow anymore the way we used to. And it's not the government burden, it's not the taxes and regulations. We're just a mature economy and we can't grow. And the markets are saying they don't believe it.
Yeah.
Because
it's hogwash.
Yeah.
Because, again, if you look back at the last 8 years, and it goes back to the election, you had higher taxes, you had more government spending, more government control, and a national debt that doubled over a period of 8 years. So don't tell me that more of the same is going to produce a different result. And, in fact, you have Trump promising the exact opposite, and the markets have responded. But stocks do look expensive. Right now, the Ford PE ratio is over 17 times. Back on Election Day, it was only 16.5.
Yeah, so you look at that. If earnings are going to stay stagnant or pull back, then it's expensive. And then I think the market does correct. But if earnings growth actually happens, if the companies deliver, as a lot of them have been, then that price-earnings multiple, earnings are higher, so the multiple gets lower. So it's no longer expensive.
So it all depends on what kind of an earnings increase we're going to get.
I think it's a show-me story now.
Yeah, it's a show-me story. That's what I've been saying, too. You know what? I think at this point, it's so interesting to be able to actually have the evidence to see, will this work? Because for the longest time, the left has been saying, no. You have to stimulate from the bottom up. You've got to help the lowest earners. You've got to give it away. You've got to give stuff away. And the right has been saying, no. You stimulate from the top down. You make an environment that is attractive for business so that business can go and hire people. Now we got a business guy in office. We're going to see. We will actually, in 1 year, take a look. Did it work? 2 years. Are we seeing growth? I'm excited.
For sure. And I think for me, the key, when President Trump said he was going to roll back regulations 75%, for me, there's too many regulations out there. I think too many industries were over-regulated. That, I think, is even, that has more potential upside for the market than people are even giving it credit for right now.
Yeah.
But the message has all been positive. This first week or so, the pipelines are going to go forward. We're going to allow energy production. We were talking about housing, a step last week, an hour after he was inaugurated, to say the federal government's going to take a little smaller role in the housing market. All positive signals.
You can find companies, by the way, that are not trading at that 17. Like you look at a Bank of America, for example, trading at 11 times. I mean, there are certain banks that are even though they've had this enormous run-up, have not met their earnings potential. And some others, you know, in some other sectors. But you're right, 17 times projected earnings seems expensive. We'll see where it goes here.
But like banks, you look at a Citibank is trading below its book value. So,
right,
you know,
exactly.
if you're looking for value, you can still look at the banks. And if interest rates are going higher, that should help the banks.
Especially since that's the group that's going to see the most earnings growth, fastest earnings growth in the fourth quarter.
Right. And that 17 times is a little more than 17 times. That's the highest PE in more than a decade. So it is worrisome, but I will note that because we had a pullback in yields, they're back up to a little over 2.5%, but on the 10-year, not at worrisome levels. I think maybe when you get to a 3% yield on the 10-year, that gives people pause. It makes treasuries look a little more attractive, but at roughly 2.5%, not that big of a concern.
So we